Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a first-time guest, but I've been following his work on financial Twitter for a very long time now. I'm excited to talk to him about his insights. He brings 20 years of foreign affairs and political economic experience, beginning his work during the Kosovo War as a liaison to the Albanians and in Europe as a political consultant for multiple political parties. He spent 10 years in Eastern Europe and the South Caucasus, including Georgia, during the Russia-Georgia War. He is a registered defense broker for the State Department, specializing in geopolitical risk assessment, logistics, and defense industry overall. Since returning from Europe to Washington, D.C., he has consulted with many members of Congress in the House of Representatives and the House Foreign Affairs Committee, the Appropriations Committee, House Agriculture Committee, and other legislative outfits on Capitol Hill, specifically those who deal with international relations, geopolitical risk, and campaign strategies. If you follow him on Twitter, he is a true DC political insider. He is currently a political economic consultant for financial institutions such as hedge funds in helping navigate the U.S. political, legislative, and financial processes. Albert, Marko, thank you for joining me.
Oh, thanks for having me.
So, Albert, we're recording this interview on Friday, September 22nd, 2023. The dollar index has had a substantial rally lately. We're up to 105.58, starting to put a lot of pain on a lot of entities that have dollar-denominated debt. So before we talk about how complicated and difficult it might be to actually de-dollarize, I want to ask you, what is the euro dollar?
Well, simply put, the euro dollar are dollars deposited in an overseas account outside of the U.S. financial system. Why that's important is because most of the global trade is done using dollars, transacted back and forth for settlements. Most of it is based on trust, which is the United States system has the most of compared to any other country in the world at the moment.
So I think what people don't understand, we've seen this narrative for over a decade now, and I've been in the gold community for a long time. The Bitcoin community has added this too. Every time like Russia or China issues a press release, it's the petro yuan, it's the gold-backed petro yuan. There's all these narratives, Albert, that have been going around for 10, 15 years now. And really nothing comes to fruition a year or two later. It's the amount of global trade in dollars. So transactions settled in dollars for all this trade in dollars. It's all settled in dollars. And then most importantly, I think, is the total amount of dollar denominated debt. That's grown a lot since the 2008 financial crisis, hasn't it?
Oh, it absolutely has exponentially gotten bigger. And, I'm glad that you mentioned the actual petrodollar. I see a lot of these arguments where, Libya said they're going to get off the dollar, Iraq going to get off the dollar, and for settling oil. And I think even the Saudis made some kind of mention of it. But, it's not a big deal. I mean, the petrodollar is a relic of what it was maybe 50 years ago, where, yes, the United States had a huge interest in oil and covering the Middle East with defense contracts and allowing allies to expand their oil production into the West. And of course, that was what the petrodollar was based on. However, that is a relic and no longer valid because at that point in time, sure, the Russians were there conducting trade globally, and the Europeans through the Deutschmarks and the French franc and even some of the Swiss francs were used for trade. But however, that's completely eroded at the moment. So all commodities that you look at, whether it's oil, corn, wheat, uranium, so on, or rice, name your commodity, it's all based and priced in dollars. At the end of the day, when a country wants to transact, whether it's Swedish SEK, Japanese yen, it all has to be converted to dollars to get the actual price of a commodity and the actual price of the currency being used to conduct settlement. And that's why, whenever people talk about, the petrodollar is going away and then that's going to undermine the dollar, it just has no more validity.
And you also have the amount of dollar denominated debt. Like I said, I think since 2008, it's more than doubled. But it seems that every time the dollar index gets weak, these foreign governments and these foreign corporations borrow even more in dollars. So then I think what the average listener doesn't understand, because they see these narratives that are presented online, they don't understand that when there's more dollar denominated debt outstanding, that there's more dollar demand. So that more dollars are required to either service the debt or to pay it off. Otherwise, there's immediate defaults.
Yeah, that's exactly correct. And the other important factor to look at is if countries want to conduct import and export trade, they need dollars. They need dollars to be able to do this, right? If they're expanding their economies, they need dollars. They need a certain amount of dollars in the reserves so their currency doesn't get into a problem of hyperinflation like the Turks. What Turkey did recently was, made a lot of noise. We're going to get off the dollar, so on and so forth. And they actually had a couple central bankers of theirs, talk about finding some kind of Swiss alternative, and they were dumping dollars on the market to keep their economy propped up. But the fact of the matter is that just caused hyperinflation. And when that happened, right after the election, Erdogan replaced all the central bankers and the economic ministers and became a more friendly dollar debt crew, and they started to raise interest rates and starting to get their country back a little bit back from the edge of the economic abyss.
Didn't he hire a senior director from Silicon Valley Bank? I think she's an attractive Turkish woman, though, so he might not have hired her for her resume.
Yeah, well, no, Erdogan is not, he's not that. I have real good contacts with the Turkish government, and they're not as, outlandish as people want to make believe. I mean, a lot of the stuff that was happening was strictly for the election, but now that the election's over, then they'll have much more pragmatic policies going forward. And the interesting thing is, because Turkey is a geostrategic country in the middle of everything, if you look at a map, whenever they had a problem big enough with their debt, magically, planefuls of dollars and euros started appearing from Dubai into the Turkish system to keep them out from actual collapse.
The other part about these narratives that like the dollar is about to collapse, the dollar is going to lose world reserve currency quickly, is actually with reality, it doesn't fit, because the last 3 or so years, hasn't the dollar actually gained market share for global trade settlement?
Yes, it has. It has gained global trade settlement market share. That's absolutely correct. And what listeners have to understand is switching off the dollar reserve is not a simple thing where you just get 15 countries together, turn on the light switch, and there you have it. There's a lot of components to being a reserve currency and a lot of requirements that are needed. Most importantly, to get away from the dollar as a reserve currency into some neutral asset like Bitcoin or gold or so on and so forth, you need actual multipolarity in the world, and that would include not just economic multipolarity, but actual military multipolarity. And as we've seen recently with the Russia-Ukraine war, is the next military power beneath the United States is at least 100 years away from any kind of real competition on a global scale. That affords the United States to have beneficial trade deals across the world. It affords us to hold leverage over countries that we don't like. For instance, China right now, the United States Federal Reserve and the Treasury Department has absolutely obliterated China using nothing more than interest rates. So these are components that people have to understand that are out there, and it's not a simple agreement that people can just switch over. There's not another country in the world that can take the deficits that the United States can take on a global scale for trade. There's no other country in the world that can sit there and project military power to safeguard trade routes, especially maritime areas. It's just simply not there yet. Now, I'm not saying that's never going to happen, because that's silly, but I don't see it happening in our lifetimes.
Yeah, I mean, since 2008, I mean, every year or two, there's just been a new narrative in the gold community and then now in the Bitcoin community. And a year or two later, there's no actual evidence that any real progress with the dollar losing enormous amounts of market share is occurring. Now, I think in terms of actual total global trade settlement, I think the dollar is down from 70%, but it's still over 50%, still well over 50%. So it is down over the last, 3 or 4 decades, but it's still by far the majority share.
Yeah, well, some of that has to do with the rise of the euro from the European Union, except for now their economy is just contracting. Almost think it's half of what it was a few years ago. And also, as global trade slows down, there's less need for countries to have dollars, especially expensive dollars at the moment. And that's why you see a little bit of the dollar market share going down in some of the nation's reserves. But that'll come right back to normal levels in the 70% range once global trade kicks back up. But it won't be for a couple of years because the economy is has a little bit of problem at the moment.
So for these countries to actually de-dollarize, what they would have to change the entire banking system in SWIFT. They would have to change all these derivative contracts. It wouldn't just be commodities markets then, like you said, with the petrodollar. It would be all these different things together then?
Absolutely, it would be everything. It wouldn't simply be just the petrodollar and a few little commodities. It would be everything. There'd be countries that have reserves in dollars, and some countries that are pegged to the dollar, like UAE or Hong Kong, the Hong Kong dollars. They're pegged to the dollar. All that stuff would go away, and chaos would ensue. And then on top of that, what nation do you have that you can trust to hold a new currency, a new global reserve currency that you would feel comfortable as a corporation being legislated over? You can have a company anywhere in the world, headquartered in the United States, and have, the security of the U.S. legal system. I mean, I don't want to hear anything about, oh, well, it's unfair, so on and so forth. The United States legal system is the most fair in terms of corporate legislation.
Yeah, it has the best contract law, rule of law for large corporations, small business companies. I mean, if there's tons of examples in the Wall Street Journal, many other areas where a small business owner in another country started businesses in China and their businesses were stolen, their intellectual property was stolen and copied, and some of them were even kicked out of China with no assets.
Yeah, and there's no recourse over there. You can go to any sort of international court or so on and so forth. I knew a Texas oil guy that had a problem in Albania. I think he lost like $100 million, and yeah, so what? He's got judgments in international courts, but what does that accomplish? It accomplishes nothing, and that's the problem you have with another country trying to step up and be a replacement for the U.S., specifically China, because that's really the only other country that's even being discussed at the moment with their BRICS currency. Narrative, but even that, you would see hedge funds and wealthy individuals start converting their money over to renminbi, and you just don't see it.
Most of those emerging market countries, they don't even care about the international court settlement. I mean, Venezuela has been ignoring that stuff for years. I know large international oil companies like Conoco and Phillips and mining companies have been suing them there for years, and there's judgments, and they honestly don't care. They just ignore it.
Yeah, there's no recourse. Like I said, there's no recourse in no legislative body that can go into those countries because they just won't recognize it. And I'm glad that you mentioned like Argentina and Venezuela. I was like, what are some of these members of the BRICS community trying to dethrone the dollar? I mean, some of them are in civil wars. Others are defaulting on IMF debts. India and China have their militaries cutting off the tops of mountains and putting air bases to go at it at one day in the future. It's like what are we talking about here? It's not a cohesive unit of a dozen or so nations like the European Union was that can get together and dethrone the U.S. dollar. It's just a silly notion in my view.
Well, I would argue the European Union isn't working so well now. Look at all the financial problems, their inflation problems. They don't have a unified bond market, and their governments have a lot of financial problems there with tax receipts and the way they're run with budget deficits. And remember, a lot of people forget the European Central Bank was running negative interest rate policy for many, many years. That's come back to haunt them.
Yeah, and that's a problem. The Europeans had a problem that they wanted to federalize to get things everything under one umbrella. The problem is when you have 3 dozen nations with separate interests, separate leaderships, and separate everything. You can't have the French dictate to the Polish where they want to send the military troops, on Germany's dime. It doesn't work, and it was never going to work. And at some point in the future, some of the nations are gonna have to face a decision on getting off of the euro and reissuing their own currency again. In fact, in 2012, the Germans secretly had ordered printing paper, currency paper, in case they had to print their own Deutsche Marks again, because the euro at that time was rumored to almost collapse.
That's very true. And the currency swap lines came out back then, and the Fed was lying about it back then. I was hearing from sources here in DC that were at meetings at the IMF and stuff that the currency swap lines were back out for US dollars back then. The demand for dollars from the European Central Bank, from large European banks, European governments. I mean, if the Italian government, the Greece government that are in the European Union are going to run insane budget deficits, and the European Central Bank's going to have to buy those bonds, the finances of the European Union is in trouble.
Yeah, I mean, the Europeans are masterclass at handouts from the U.S. Treasury and the Fed. I mean, we send swap lines over there all the time, and what they do is they send it to the ECB. The ECB sends their dollars out to all their key banks and whatnot. Now those key banks multiply it by 10. So they just add another zero at the end of the accounts, fake dollars, electronic dollars, and then they loan those out to key clients. Now, the Europeans have a problem when the non-performing loans start cascading and coming back, and they can't service it because they multiplied their dollars by 10 that they got from the Fed. And then, once again, the Fed has to come in with swap lines to save the day.
And I'm sure you speak to some of the same sources I do in DC. I mean, I've heard this has been going on almost every couple of years since 2008, 2009, because of the problems in the European banks and all the budget deficits and all the crazy policies the European Central Bank was running. There was problems in Greece with there was a ton of American and European banks that had bad investments with MF Global, with the Greek bonds. And then there was derivatives market stuff that blew up on Brexit. And almost every time, Albert, like you said, it's currency swap lines to the rescue.
Yeah, that's exactly right. I mean, the Europeans have a problem every 5 to 10 years with their non-performing loans and currency implosion and contraction in their economy. And we'll probably see swap lines headed out over there, most likely after 2024, after the U.S. elections again.
So how much, according to estimates, have you seen that are accurate for total amount of dollar-denominated debt is there floating around?
Oh, that's a good one. That's a loaded question. Let me break it down to you like this. I think the euro dollar market is about 13 trillion at this moment, maybe a little bit higher. And that's off the books of not the Fed. And the Fed is probably running the Fed's balance sheet is about 12 to 11 trillion dollars at the moment. So it's we're talking about dollar denominated debts and likely like the 20 to 25 trillion dollar range. Once total it all up.
So that's just regular plain dollar denominated debt from foreign governments and foreign corporations for our listeners. There was I think in December 2022, there was an article out based on a report from the Bank of International Settlements, an article by Reuters. I could put a link to it in the information description section below the video. It was quoting an estimate of 80 trillion off balance sheet stuff. And this is over the counter derivatives, forward swaps, other stuff.
Yeah. Once you add in derivatives and whatnot, I would even say and probably bet that it would surpass 111 trillion.
Wow. So with all the sheer size of that, it makes it even more difficult and even more complex to de-dollarize then.
Oh, absolutely. You're talking about total collapse of the economic system and most likely political systems across the world.
But then if the BRICS decided then that they only wanted to do what this alternative currency is, BRICS currency, for a small amount of commodities, do you think that they could get away with that then without fully de-dollarizing?
No, I mean, they'd be able to do some kind of barter system between one or two countries, but that's about it. They'd run into hyperinflation at some point. They'd be buying wheat at like, $2,000 on the futures market. It just doesn't work.
So they'd still then, even if they did this global trade settlement outside of dollars, either other currencies, a new BRICS currency, I don't know, gold or oil, maybe they swap commodities or something like you said, barter oil for wheat or something like that, or oil for gold, then they'd still have to convert to dollars to buy the commodities that are not in the system?
That's exactly right. So how would you transfer over $1 billion for $1 billion worth of oil from one country to another? The problem becomes, well, how do you price it? You have to use dollars because there's no other currency that gets traded in enough volume. So, and on top of that, if the Swedes and the Japanese wanted to trade, or let's just say the Indians in South America or South Africa, those currency has to be sent to the New York Fed to be converted equally, and then has to be settled to the country that it's going to. There's just no other mechanism right now that could handle such a trade. There's just none. I mean, they've tried. Yeah, the Russians have tried, the Indians have tried to do the rupee and Indian thing, and now the Russians had to call that off because they're stuck with useless rupees that they can't use.
So do you think then the Fed and the US Treasury are going to continue to weaponize the dollar then? So for these countries that try to do this and then it fails, or their currency gets problems because the dollar rallies and they get in trouble in their domestic economy with dollar denominated debt, is the Fed and the US Treasury going to weaponize the dollar then to say, like, you have to agree to these trade policies or these things in order to get swap lines?
Yeah, of course. And they've always done that behind the scenes. I mean, even, Janet Yellen had gone to the Norwegian Sovereign Wealth Fund, I think like a year ago, actually, and told them that, in order for, you guys to put your money into the United States stock market and equities, will drive the price of oil up to 130. You guys can sell, and then take that money and put it back into the United States system and support the U.S. market. If she could do that, she's the Treasury Secretary is the one that actually dictates USD policy, so she can take the dollar up and down at pretty much at will and stress certain countries at certain times. I mean, she went to China and they cut who knows what kind of deal they cut behind the closed doors. And the day or two after she left, the dollar actually went below 100. And those things are not coincidences. The United States weaponizing the dollar has been something that we've done for decades. Now, I don't agree with a lot of the actions that they do, but it's just a simple fact of life at the moment.
Yeah, I don't agree with any of their dollar weaponization process, but it seems that the US, a lot of people still talk about the petrodollar, but I agree it's not as important anymore. Maybe after the shale bubble, it's definitely not as important, even though the US has a lot more oil production now than in the past. But I think the US capital markets are they're the big relative advantage compared to the rest of the world.
Yeah, the US capital markets right now, I believe, is almost 70% of the entire world at the moment. And going back to the petrodollar and oil, even if the Saudis said that, we want to we'll take renminbi for oil, the problem is that renminbi goes directly to London, which gets swapped out for dollars and sent right back to the Saudis' accounts in dollars. So no one holds these currencies that are trading outside of the dollar for more than a millisecond.
Yeah, and a lot of people aren't aware of this too, that if the Saudis have all this extra profits from oil rallies and the Saudis want to go buy some gold tonnage, they have to convert the oil into dollars first to go buy that gold tonnage.
Yeah, of course. And the gold is a great hedge versus inflation. And as much as I talk about against gold for basically because of the narratives that it's going to replace the dollar, it's an important component in diversification of someone's portfolio and even nation's portfolio. Certainly need to have it.
I think Brent Johnson is actually he's more of in the dollars and gold camp, kind of a barbell strategy.
Yeah, I mean, Brent and I talk quite often, personally. Sometimes, we meet up in Florida, Puerto Rico, whatever. But yeah, he's absolutely right. It's just like there's a push and pull, especially if the United States is weaponizing the dollar, is you can jump into gold temporarily or even for a long term, hedges against any kind of radical dollar moves that are, coming up, maybe, spike up to 110, 115 in the Dixie, and then, lowering over the course of the next 10 years back down to something normal for global trade to start moving probably in the 80 to 85 range.
So you think the Fed and the Treasury have a lot of control over the range of the dollar on exchange rates, and that if the dollar index or the dollar exchange rate gets too high, then they start to panic? Because would you consider like a huge dollar rally, a super spike in the value of the dollar against other currencies? Would that be basically a global margin call?
That's exactly what it would be. And that's exactly why they didn't want the dollar to go over 120, because at 113, 115, Europe was breaking. The euro was absolutely getting crushed, and it would have been a systemic failure of the entire global market system. So they know that going over 113, 115 is a problem, and you won't see the Dixie go over that in probably in the next 5-10 years at all.
Yeah, so the dollar's exchange rate for our listeners out there, there's tons of people like David Hunter and Peter Schiff are saying the dollar is going to collapse, like dollar index, I think their long-term target's way below 85 or 80. And then there's other people saying the dollar index is going way above 120. I'm not in either camp. I mean, either one of those scenarios, the Treasury, the US Treasury and the Federal Reserve Bank, that could potentially collapse the entire system.
Yeah, that would absolutely collapse the entire system both ways, going both ways, going sub 70 and going north of 120 would absolutely cause catastrophic problems globally. A lot of these guys that talk about extremes, they have things to sell and narratives to push, being gold and crypto and whatever else that they're talking about. The fact of the matter is the Fed and the Treasury can control the dollar policy at will, and they're very keen on not breaking systems overseas, specifically the European Union.
Well, plus if things are about to break, Albert, we know behind the scenes, and we've heard this from our different sources. I mean, the currency swap lines just come in now. I don't know how often they are in the amounts because they're not allowing Fed audits, but things do leak out eventually. And we know for a fact since 2008 that that's kind of been the policy, that they just put the swap lines in place.
Yeah, and it's not simply just the swap lines from the Fed or the Treasury. They actually have partner banks like JP Morgan and Citi and so on and so forth that have direct swap lines to European banks that can do the same thing without it being on the books.
Wow, I did not even know that. That's crazy. I mean, the banks, the 5 or 6 too big to fail banks here in the US, they get away with so much stuff off balance sheet. I just found out recently that they can keep their entire over-the-counter derivatives position, tens of trillions. They can keep the entire thing off balance sheet. It's not even mentioned in their annual reports.
Yeah, I mean, there's they hide. So the Fed hides a lot of their balance sheet on credit swaps with actual U.S. banks. So when you see the balance sheet of the Fed at like 9 trillion, I think it was last time, maybe 8 trillion, whatever it was. Well, the fact of the matter is, my people told me it was really 12 trillion. And when you start adding up all those credit swaps into the U.S. bank, so yeah, they're definitely partners with the Federal Reserve, and so they work hand in hand. They actually work hand in hand, suppressing oil and suppressing gold on the markets, specifically the futures options.
So do you think then that the Fed's official balance sheet, which is a little bit below 9 trillion, I think they've sold off almost $500 billion officially, but you and I both know that that's not real based on all our years of experience and working our sources. Do you think then that that's going to have to do a 180 based on the reckless spending coming from both political parties in DC? Because honestly, I'm trying to figure out where the Treasury demand would come from, but the normal buyers, so your Chinas, your Germanys, your Japans that are running these large trade surpluses and recycling the foreign exchange reserves to buy treasuries, they're not the buyers anymore.
Yeah, well, that's the $64,000 question. It's like, who's going to be buying this stuff? And the reality is the Treasury and the Fed are probably just ping pong back and forth and buying their own balance sheets and treasuries and bonds and whatnot. I mean, there's so much manipulation going on in terms of national, quote unquote, national defense of protecting the U.S. market. Well, we would need to do this sort of shenanigans on the level of what China does, faking data, if our political system was in order and excessive spending for political optics would stop.
So I want to transition now to de-globalization. Do you think that that's a trend now going forward because of U.S.-China relations?
Well, I don't know. That's difficult, right? Because de-globalization, or maybe de-risking would be a better term. I mean, I don't think that we're in a de-globalization component. I think there's a lot of problems where supply chains are shifting from one nation to another nation, and the investments are following, and the trade is kind of stalled because of all this. Right, that's what I think is most likely happening. I don't think we're in a de-globalization thing. We're always going to have imports from China. We're always going to have imports from Europe, and vice versa. I think the next thing that we're going to be looking at is most likely pushing into like West Africa, North Africa, and using those emerging markets for new debts and new trade deals.
Is that for natural resources or for actual manufacturing?
It's going to be both, really. I mean, they have plenty of oil, they have plenty of uranium, fertilizers, specifically from Morocco. OCP is one of the biggest fertilizer companies in the world. But if you look at the statistics of the census and the population growth in Africa, it's right there for the taking. Services, manufacturing, natural resources, travel, hospitality. I mean, this is probably the last place on earth that hasn't been tapped.
So you don't think then that Mexico is going to be one of the main beneficiaries of the majority of the manufacturing that leaves China?
Well, it already has, right? It's obviously gained a lot of manufacturing that's left China and came to the United States for imports coming over the border and whatnot. But I mean, they're almost at capacity. I don't really see how much more manufacturing they can actually absorb, because they're just at some point they'll have a labor problem. So, and on top of that, that only helps the United States. Europe has another problem altogether. So what they need to do is expand their influence into Africa once again. I mean, I know they have the whole colonizer stigma, but they need to get over that and push into Africa, just like the Turks have. The Turks have done an actual magnificent job of using their old Ottoman, centuries-old Ottoman communities in Africa to send out their representatives and start conducting trade. And what they're doing is they're setting up shop, they're setting up manufacturing, they're setting up trade for the long run.
But do you think a lot of this investment is going to have to wait for these overly indebted governments? They're going to have to wait until interest rates come back down? Or are we going to see a bust first because of these higher interest rates, maybe an official recession? Obviously, I think the private sector, you have a big difference between the real economy and the asset markets right now based on interest rates.
Yeah, I mean, we're certainly in a higher for longer. I don't think equities have any business being up here in the 4,400s. It's just, I mean, it's just a silly notion, to be honest with you. Some of the valuations of these companies are so overblown that it's laughable at the moment. So, I mean, we do need somewhat of a correction. I do think that we're going to have somewhat of a recession. It'll be a soft recession if that's what you want to call it, because they can just change the data at will from one quarter to another to say, okay, well, now we're officially out of recession and full steam ahead, and they'll pump in money through QE and stimulus programs to get the economy, or at least the U.S. economy, back into a bull market.
I think we're having also a mini dollar milkshake here, maybe with the strength of the dollar, that these other countries are already in a recession. A lot of emerging markets are having really bad inflation on a relative basis. They're in a recession or depression. A lot of the manufacturing countries are not doing as well. The U.S. economy on a relative basis is better. So you have a lot of capital that's come into U.S. capital markets compared to a lot of other countries.
Yeah, and that's one of the reasons why the markets were on a bull run for the past 2 years, is a lot of the money from capital flight from China and Europe came into the United States because it was the safest haven. Now, that's one, it's a dollar denominated, country. Two, it's the strongest country at the moment in terms of economic activity. I mean, you can see that. I mean, the luxury market exploded, real estate here exploded, and I mean, used cars exploded. Everything just exploded. Now we're going to have a retracement without question, but it certainly warrants the argument that the United States' economy is still the best and by far the leader at the moment.
Well, I think these high interest rates have created an even worse bifurcated economy in the real economy, because if someone's making, say, over $500,000 and they don't have a lot of high interest debt, they're fine. They have assets, they have small business, they have investments that are diversified. They don't have high interest debt at these interest rates. People making less than that with high interest debt, credit card debt, auto loans, high mortgage payments, high rents, all these things. I mean, they're getting crushed right now.
Oh, they're absolutely getting crushed. And there's two sides of the story. The top 10% of the United States are making absolutely gangbusters money, but the other 80-90% are stuck with inflationary issues hitting their pocketbooks. Now, they've attempted to push wage growth to appease that for political optics. Yellen and Lael Brainerd has been the brainchild of that. But that also created a little bit of a problem of sticky inflation going forward. Now, the 2% inflationary, the inflation targets of the Fed is probably going to have to be abandoned over the next 2 years. It's just simply not going to, with the amount of wage growth that the United States has seen, it's just 2% is just simply not attainable. I mean, they might get that on a headline number on CPI, but the reality is that we are 20% above what we were a few years ago.
Yeah, the input costs are way higher, especially if they're going to keep raising wages, because then you have the wage price spiral.
That's exactly right, and we're seeing that right now, where there's no end in sight. Obviously, the UAW workers demanding 40% and a 4-day work week is just absolute insanity. Fast food workers are now making $23 an hour. that's going to hit the consumer's pocketbook at some point. These little pushes for labor, although the United States worker does deserve it for after 40 years of having nothing, that comes at a time where they're jumping at 20-30% in a small time frame that's causing massive inflationary issues.
Yeah, so you have, for our listeners out there, you have the workers and the workers' unions and the politicians who are trying to appease them to buy votes, who want higher wages. But you also have these companies, especially if you're a small business owner, you have high debt costs now. And then your sales might be down. So your profit margins are getting squeezed really bad. You have much higher interest expenses on your balance sheet that you weren't planning on. So these businesses, a lot of them are in peril. And that's why we're seeing all the bankruptcy data coming out for a lot of small businesses and corporations in the US.
Yeah, I mean, the bankruptcy numbers are absolutely astonishing. We had the highest bankruptcy numbers, I think, since like the 2008 financial crisis at the moment. And it's just not stopping. And, something that people don't talk about is all the PPP and COVID loans that small businesses got are having to be repaid now, right? And then those are extra costs that people, some small businesses took $2 million to $10 million. Those are things that, that's something that Congress could probably get together and say, well, we need to forgive that, forgive those COVID loans to small and medium-sized businesses and take some pressure off. And not one congressman has even talked about that.
I mean, the stuff they're talking about in DC, Albert, they snuck in, I spoke to a Republican strategist who was looking through the Inflation Reduction Act. He said that AOC and her friends got about 70% of the Green New Deal snuck into the Inflation Reduction Act.
Yeah, I mean, this is a regime shift, that Biden is attempting with the progressives of, high debt, MMT, new Green Deal, thinking that, this is going to create new jobs and a cleaner environment when the truth of it is just exactly the opposite. There's less jobs. There's more need for commodities such as oil for these green technologies. And the labor force is simply just not going to, the debt is going to be too high and the labor costs are going to be too high. So I don't, they can say all these beautiful things on CNN and MSNBC, but when the numbers start to come in about 5 years, they're going to see such an absolute failure of economic policies.
Well, did you see all there was actually a Wall Street Journal article about the Department of Energy that the lawyers in their ethics department were warning about the record amounts of insider trading from all the Department of Energy employees from all the spending that they're doing. So, I mean, if they're spending that insane amount of money on policy, I don't think it's going to be allocated correctly. It seems like there's just tons of corruption and grift going on in insider trading here in DC.
Oh, yeah, you can see that. I mean, DC is just a small component of it. I mean, even like in Wall Street, if you just go into any one of these good screeners that looks at unusual option activity. I mean, when the market cap of a company is 100 million and there's $30 million in bets on options for 2 months out, I mean, how much more of insider trading do you need to prove at that point in time? But, the SEC has no interest at the moment to clamp down on that because it's all being done by their friends that they go get jobs afterwards at.
Unfortunately, this is the revolving door of corruption around here. And then you have a lot of the lawyers at the SEC, and they want to get jobs in compliance at investment bank, or they want to go work at a white shoe lobbying firm, or they want to go work for a hedge fund.
That's exactly right. I mean, that's the revolving door of the SEC and the Fed is, you go get a job there, you get your information and how things work, and then you take it to a hedge fund and sell your services for, $200,000, $300,000, a month. So that's just the way it works.
My last question here before I let you go. We've discussed a lot of the problems here with misallocation of capital, problems with the current financial system. I don't think the dollar is going away anytime soon, but I see just a lot of stagflation in the system. A lot of it's because of bad policy by the central banks and governments, just misallocation of capital. And then I see enormous problems on the supply side. So do you expect then bull markets for some of these commodities, food, energy, fertilizer going forward because of all these problems and policy blunders?
Yeah, on two fronts I do, right? So I do see blunders having issues in the commodities market, and I do see them being in a bull market for the next 6 to 12 months. I do like, and I've spoke about this many other places, but I do like corn and wheat because with the upcoming election, you have significant senators running for re-election, specifically in the middle part of the country where all the agriculture companies and cornfields and everything are. And what you see is the price of corn getting crushed and just getting crushed to keep down food inflation from the government. However, as February, March, April comes along, and those senators need to start appeasing the rural vote to get reelected, you'll start seeing interesting subsidies on corn, like ethanol waivers and so on and so forth, that comes out of DC, and stimulus programs for agriculture. So I do think that agriculture is probably going to be the biggest beneficiary of these inflationary issues produced by not only blunders in the political system, but actually just basic payoffs in the political system.
Well, you saw George W. Bush start to issue corn ethanol subsidies, and then he forced 10% ethanol into our gasoline, and then actually ruins internal combustion engines. But it was a bribe to Iowa corn farmers.
That's Iowa, Minnesota, all the way into Pennsylvania. Pennsylvania and Michigan also have corn farmers. So those ethanol waivers are significant payoffs for those rural voters.
The other problem, though, Albert, on the supply side, I'm just looking at the headlines the last 12 months. You see crop failures, crop yields collapsing, shortages. I think Kansas had the worst wheat crop in 50 years. And then that caused the knock-on effects was it caused a regional bank in Kansas that had all these loans out to farmers collapse. So I'm just seeing all the food crops and yields. It looks like there's going to be a lack of food for a lot of different countries over the next couple of years because farmers did not order the fertilizer to do a lot of planting seasons.
Well, that's one of the reasons. The fertilizer is one of the reasons. Government policies in countries like Holland, where they've tried to get rid of farming because of the climate goals that they're stating. But also, the climate is, I think we're going through like a solar minimum at the moment. So we actually have colder times coming earlier and staying later in the year. You can actually see the crop yields from Germany, I believe, the barley and hop, that's been going down 5% year over year for the past 3-4 years. And that's something that I don't think very many people talk about outside of the, agricultural experts, is like, the climate's changing for the cooler, which has actually ruined yields tremendously. And that's actually why North Africa has gotten an influx of farming money. And believe it or not, as they're turning the deserts back into fields for wheat.
Well, you also had natural gas prices in the European Union that were so sky high, they shut down most of their fertilizer plants for 9 to 12 months, something like that.
Yeah, I mean, fertilizer is going to be a big problem. I mean, Belarus is a big fertilizer exporter that they have, since they're siding with the Russians, those exports have dwindled. So a lot of
and Ukraine, which is the breadbasket of most of Europe, right? So I don't know what the wheat crop is there.
Yeah, the wheat crops actually came in, I think, 20% less, or maybe it was 10% less than what they speculated. And on top of that, they have transport issues because of the Russians. But also is the EV markets, because the EV batteries have started using phosphates for new batteries. I think the lithium iron phosphate battery technology that's starting to gain steam. So a lot of that a lot of those phosphates that would normally go to agriculture is starting to go to the EV market.
So with this total amount of dollar-denominated debt, do you think that the Federal Reserve Bank, the U.S. Treasury, can they actually allow deflation for a long period of time, or are they going to stick their nose in, then change the rules, start doing new quantitative easing or stimulus plans to try to prevent deflation? Because if I look at deflation, I start seeing default on dollar-denominated debt. I see a super spike in the dollar index, and that means immediate collapse and basically like a knock-on effect. So if like companies go or governments go, then the banks go, and I just see it cascading like dominoes.
Yeah, well, we also have to keep in mind that the Federal Reserve is not the only player in this world. So you actually have the Treasury that's actually counteracting a lot of the Fed policies, which has been the biggest problem in the last 12 to 24 months. Everyone wants to pile on to Powell and say, oh, the Fed's screwing up, so on and so forth. But majority of the reason is because Yellen is trying to do subtle QE on the back end, keep the markets where they were for political optics. So yeah, I don't think that the Fed wants the economy to contract to temper inflation. However, the political component from Yellen and Lael Brainerd is pushing it the opposite way and counteracting whatever Powell does. So we have this push and pull problem going on. So but what you said is about deflation is absolutely right. I don't think that they're going to allow that in the near term until after 2024.
Well, they can technically allow deflation, for a couple months, maybe a quarter or two, but then the tax receipts start to collapse. And I think some of the real reasons for quantitative easing and the Fed to expand its balance sheet, they have to plug the holes in the government budget deficits when the asset prices collapse.
That's exactly right. Now they can do that with off the book financing, but not for very long. So you're right. Maybe a quarter at most, they can get away with something like that.
And it's just really sad things have gone this way, but both political parties in DC, they don't want to cut spending.
No, of course not. It's an election year. We got to spend more.
Oh boy. Well, Albert, I really enjoyed our discussion today. I know you don't have a newsletter right now. You appear on a lot of interviews on Complete Intelligence, and tell my listeners how to follow your work.
Okay, great. Thank you very much. I'll be doing a subscription most likely for the election starting in November at some point going forward for the next 12 months, covering economics and political actions out of DC.
Excellent. And I'll attach a link to your Twitter or X profile link below the video in the information and description section.
Perfect. Thank you very much. Thanks for having me on.